A seemingly ordinary stock made history by surging 66 lakh percent in a single trading session. This stock shot up from a meager rupees 3 per share to rupees 2 lakh 30,000 per share, beating MRF's record and becoming India's most expensive stock in just one trading session. And no, it wasn't a mistake or a typo, this was a purely fundamental move. This isn't a fairy tale, it's the story of how a hidden gem shattered market norms and stunned investors. For years on end, this company has been hiding in plain sight despite managing a rich portfolio across sectors like finance, real estate, and manufacturing. Its stock market price remained flat at Rs 3 for decades. October 2024 changed everything. Before we get into that, let's rewind a bit. Elcid Investments is led by Arvind Vakil, who was also one of the original founders of Asian Paints in 1942. Over the decades, his legacy grew, leaving Elcid with a 3% stake in Asian Paints, that is 70 crore position in one of India's top companies. Asian Paints alone boosted Elcid's value, but for years, the market ignored it. Why? A big reason was its limited public float. As compared to other holding companies, the promoters hold a large chunk of the float with very little left for the public, making the stock illiquid. To address this, Elcid's promoters tried to delist twice. First in 2013, they offered to buy back shares at 11,455 each, but fell short. Again in 2022, they raised the offer to 1,61,023 rupees per share, but still didn't reach the threshold. These failed attempts highlighted a much deeper issue. Elcid's market value was out of sync with its true worth. And this problem was quite evident as Elcid's book value per share stood at Rs 6,85,000 per share, but its market price was equivalent to 3 eclairs. In 2024, this valuation mismatch caught SEBI's attention. Due to no day-to-day operations of their own, investment and holding companies had no specific route for price discovery, which caused them to trade below their book value. SEBI planned to resolve this issue once and for all with the introduction of a special call auction, designed to reveal the true value of companies like Elcid. This auction is like a completely free trade zone. It occurs on a specific date and time, and during that particular period, investors are allowed to quote whatever prices they want. There are no upper or lower circuits, so you can go as crazy as you want. The main motive behind this move was to drum up investor interest in these stocks and also create a new price discovery mechanism for holding companies that do not have active operations of their own. Circling back, Elcid Investments was a part of this special call auction. This auction allowed investors to bid on Elcid's share, leading to a revaluation that shot the price up by 66 lakh percent in just one day to 2.36 lakh rupees per share. This surge revealed Elcid's potential, especially its high-value assets, like its Asian Paint stake. The results showed just how undervalued the market had kept Elcid for decades. This is only the beginning for Elcid. Even with the new valuation, Elcid's stock price reflects just a fraction of its true potential. There are several other companies with the same valuation mismatch despite strong assets and investments. But before we get there, this is not an investment advice. Do your own due diligence before you plan on investing in any one of these companies. Let's start with Kalyani Investments. KIL holds a significant stake in various companies of the Kalyani Group, particularly Bharat Forge. Its current price is 4,307 rupees and its book value is around 24,000 rupees. That is an undervaluation of 458%. The next one on the list is Elcid Investments. It is a relatively lesser known but a significant player in the Indian investment landscape. Its core business revolves around strategically acquiring and holding equity stakes in various companies, often with a long-term perspective. Unlike traditional NBFCs that focus on lending or other financial services, Elcid Investments operates as an investment vehicle. It is part of the Birla family of companies. Their major holdings include Awadh Sugar, Chambal Fertilizers, Ganges Securities, and Magad Sugar. Its current market price is 587 rupees per share and its book value is rupees 2,811 per share. That's an undervaluation of 387%. The third one on the list is Maharashtra Scooters. It's a subsidiary of Bajaj Holdings and Investment Limited. The company, fundamentally rooted in the production of castings and components for 2 and 3 wheelers, is intricately linked to its strategic holdings primarily in Bajaj Auto and Bajaj Finance. Coming to the fundamentals, the book value of Maharashtra Scooters is 26,894 rupees and its current market price is 11,282 rupees. It's an undervaluation of 138%. The last one on the list is Pilani Investments. Just like SEBI Investments, Pilani's primary business model revolves around the acquisition and management of equity investments, particularly in companies within the Birla family of conglomerates. They hold a 33% stake in AB Real Estate. Their book value is 15,532 rupees and their market price is just 3,815 rupees. That's an undervaluation of almost 300%. These companies, just like Elcid, remain hidden due to illiquid shares. As interest grows, they may finally unlock their potential, giving value investors great opportunities. Elcid's rise is a testament to SEBI's role in price discovery. The auction revealed Elcid's worth, bridging the gap between its hidden assets and market value. Having said that, all the companies covered in the video are just for information purpose. Please do your own due diligence and risk reward analysis before buying them and click that subscribe button if you like the content.